Hey everyone, Jason Reno here with the Reno Lending Team and Prospect Mortgage. Today's Tuesday, November 10th, and hope everybody's week's off to a great start. As most of you guys have heard, President Obama on November 6th, last Friday, signed in legislation that extended the first-time homebuyers tax credit. As most are aware, it's a tax credit for first-time home buyers for $8,000 or 10% of the purchase price, whichever is greater. But really, what the new news is, or what I guess is groundbreaking or different than the previous legislation, is that there's now a $6,500 tax credit for non-first-time home buyers. And basically, how it reads is this incentive comes in the form of a tax credit for up to $6,500 for qualified purchasers who have owned and occupied a primary residence for a period of 5 consecutive years during the last 8. They're going to want you to prove basically that you haven't bounced around over the last 8 years, that within the last 8 years you picked a spot, owned the house, and lived there as your primary residence for 5 consecutive years in order to qualify for the $6,500 tax credit. A couple other changes is obviously the deadline, since it's been hence the extension. Previously, you had to have taken occupancy by December 1st, 2009. It is now extended to where they actually changed it up a little bit too. You have to be in contract on a property or open escrow by April 30th, 2010, and then they're giving you 30 days to close the escrow, meaning that you have to close by June 30th, 2010. So you have to have a contract, you have to have a property, you have to be in escrow, the contract date of April 30th, in a 30-day escrow to close on time. And one of the other big things, or what I feel is the biggest incentive through all this, or the biggest change, is how they extended the income limits. Previously, for a single filer, single individual that is out trying to purchase a home, anything over $75,000, the tax credit would start to phase out. Now they are saying for a single filer, you're allowed to go up to $125,000 and still receive the $8,000 or the $6,500 tax credit. However, a single filer's anything over $145,000, you are completely ineligible for the tax credit. As well as it was increased for joint filers, husband and wives as well, basically can earn up to $225,000 and they're still eligible for either tax credit. But same thing, $245,000 and above are ineligible for the tax credit. Also, one notation that was added is for either credit, being the first-time homebuyer $8,000 tax credit or the $6,500 move-up credit, the purchase price cancels out at approximately the purchase price cannot go over $800,000. As soon as you go over $800,000, you're ineligible for either one of the tax credits. Also, on another subject I just wanted to touch on, I know we've been talking about this, about how debt-to-income ratios are going to change, and basically as of December 12th, Fannie Mae is going to update their desktop underwriting guidelines to lower the debt-to-income ratios. So that means we have to have you in escrow with the Fannie Mae desktop underwritten approval specific to a property, so that's why you have to be in escrow, by Friday, December 11th, in order to use the higher debt-to-income ratios and still get the loan through. After December 12th, there will be new ratios. So whether you're a current real estate agent working with clients or a current client working with agents, in either situation, you're going to have to double-check either your clients or your own pre-approvals to make sure you're still within your purchase price guidelines, or your qualifying power, I should say. Obviously, we don't want to open escrow and put escrow deposits on the line and things like that to come to find out, 10 or 20 days into escrow that we can't do the loan. Also, rates are trending upwards. We've been saying that. We've seen bonds opened up decent this morning, but now we're down to a level of support here, and we just got alert to lock a few minutes ago. So rates are trending downwards. This, combined with the debt-to-income ratios, will affect some of the qualifying power of you or your client. So please give us a call so we can go over everything properly. If you're being pre-approved and you're not verifying tax returns, bank statements, paycheck stubs, having your credit ran, things like that, then you're not having it done properly, and you need to talk to a professional, because there's a lot of changes coming up that you need to be aware of as an educated consumer. So please feel free to give us a call. My brother Keith and I are always here and available for you. My direct office line is 661-290-3819. Keith's direct office line is 661-290-3817, and you can always be found, or all our contact information can always be found, at www.renolending.com. Hope everybody has a wonderful week, and we look forward to talking to you soon. Thanks.